but a hawkish cut, okay? It's kind of contradictory. It's kind of ironic. They're cutting, which is dovish, but they were hawkish in their tone. And they said, hey, we got problems. We got problems with our fiscal spending.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Well, this is the first Monday, right, after New Year's, so all of our resolutions officially start today. Including dry January. I know it's tough when you've got a Wednesday, and then a weekend after. I know. We all just make excuses. But you're probably wondering, why in the world do you have a cowboy hat on? This is a cowboy hat that I got at the University of Texas, where me and a friend of mine, Rich Sellers, who was a sales manager, a regional sales manager here for us, we had a celebration of life today in Lake Arrowhead. And his wife said, Rich, want all of us to wear boots, cowboy hats, and show up for him. So he and I both were Texas alums, both from Texas, and we worked about 6.5 years together here at PRMG
on the wholesale side. So he was one of our managers, great dude. It was at Lake Arrowhead Country Club. It was a beautiful day. It's a beautiful drive. He treated me, over the years, golf, dinners, just bigger than life guy. So we all got problems, but when you have a problem with your health, you got one problem. So let's put life into perspective. Rest in peace, Rich, and may everyone have a happy, healthy new year. Please, please, please take care of yourselves and your bodies and your health. Unfortunately, he was unexpectedly stricken by a very acute cancer, and F cancer, my favorite hashtag this week. Okay, what is going on in the world of the markets and the feds and everything else? I have a very interesting AI use that I came across that helped put out a fire, if you can believe that. But I'll get to that at the end, and I am going to try and keep this under 10 minutes. It's not a New Year's resolution. I'm just going to try. So I was reading some secondary commentary in one of my subscription services, and it was talking about last year, says, despite the Fed's hawkish tone and rate sell-off at the end of December, non-agency, which is jumbo loans, had their biggest year ever, at least since the global financial crisis. So $150 billion in jumbo loans were done last year, and I thought that was interesting. And, the yield spread there was pretty consistent, and also the supply at current levels is somewhat constrained. So anyway, just thought that was a positive news. And then when I saw and I read about the hawkish tone, I wanted to talk about the hawkish cut. I know a lot of us on here probably know what that is, but when the Fed cuts the rates, that is dovish. Okay, remember we talked about hawks and doves many years ago here on this thing. But a fiscal hawk is someone that is going to make sure, we don't spend that much money and we got to be tight, and we're not going to just cut and release the money supply and open up the floodgates because inflation will come back in. That's a hawk. But a dove, hey, we need to get some more money in the system. For example, the lower end of our economy is hurting, yet inflation is slowing, but it's still growing. And these are all thoughts that I had over the weekend. And then I was watching MBS Highway, and they were saying some similar thoughts. I started to watch their 2025 recap. So Barry and Dan, I apologize. I got about 4 minutes into it, but it's 10 o'clock here. I got to finish my video. I got to eat the rest of my Mexican food, and I got to hit the road. But I'm going to watch that on my drive home. So thank you guys. But a hawkish cut, okay? It's kind of contradictory. It's kind of ironic. They're cutting, which is dovish, but they were hawkish in their tone. And they said, hey, we got problems. We got problems with our fiscal spending. And that's the first time they're really, you remember they have a tri-mandate, right? Moderate long-term rates, which we have a 30-year bond auction coming up this week. We have a 10-year note auction tomorrow, and the 3-year note auction today fell flat on its face. So there's over $100 billion in treasuries being issued to the market this week alone. There's almost $10 trillion this year. And so when you want to talk about a hawkish cut, okay, we're cutting the rate in December, but we are worried about where we're going. We are worried about we're somewhat worried about inflation. We're somewhat worried about unemployment, but they were saying there's a lot of unknowns coming up. There's the tariff talk, and budget reconciliation is a word we're going to hear a lot about over the coming months as we get into getting past that continuing resolution that's got passed by Congress and having to get maybe more of a budget or maybe another continuing resolution that would happen kicked down the road later this year. So the budget being done will bring certainty for institutional traders, the Fed, and inflation. All the meanwhile, it's jobs week. So we got a lot going on this week. On Friday, the Bureau of Labor Statistics is going to show us, is the unemployment going up? It's been at 4.2%, and the Fed dot plot in their hawkish cut, they said for all of this year, the unemployment rate would be at 4.3%. Now, I thought that was interesting. There's two things that they did that I thought was a setup. So when they said, hey, we're not sure what's going on with this new administration and tariff talk, and we're not really sure with our fiscal spend, the Trump administration, the first time around, he had a field day beating up Chair Powell, who he appointed, by the way, in the press every time he didn't get what he wanted. And so before he took office, the Fed squarely put the ball in Trump's court. So you get your house in order and Senate and the Congress, and you pass a budget, and you work on the stuff we've been trying to work on for the entire time we've been here. So, and the other thing that was the setup is the Fed gave themselves an out on labor. Do they really think the unemployment rate is only going to be at 4.3% the rest of this year? Well, if it ticks up above that, that gives them the green light to go, hey, the economy is not doing as well. I think, this is my opinion, not conspiracy theory. You can look at the dot plot yourself, but we'll get an unemployment rate Friday. Job opening, labor turnover rate tomorrow. We get that tomorrow. We get ADP payroll, more jobless claims, continuous claims. What's going on? The quit rates, all these kinds of things. It's a big part of the Fed's mandate. But remember, everyone says dual mandate, but it's a tri-mandate. They are trying to have moderate long-term interest rates. So our 30-year auction this week, which I believe is in 2 days, is going to be pretty important. I think it's on Thursday, actually. So we'll see. We'll see how the world wants to digest our bonds. There are a couple other feathers in the cap of the Fed, and let me talk about them. So, where are they cutting down to? What is the neutral rate? What's the market rate? So typically, you want to look at the 2-year Treasury, which really hasn't moved up much. It's at 4.28. I'm just looking at MBS Highway right now. It's at 4.28. Well, the Fed funds rate is at 4.37, 4 3/8, 4.4, however you want to round it up, between 4.25 and 4.50. So if the 2-year Treasury comes down, which it would do that if there was slowing growth or maybe rising unemployment or even less inflation, those will all be signs of maybe kind of a softening economy, not necessarily falling off a cliff. And if the 2-year Treasury yield comes down, then the Fed can cut down to that rate. So we all used to talk about the LIBOR and the T-bill index. Well, now there's the SOFR, the Secured Overnight Financing Rate. So the SOFR is what all of our mortgages that are ARMs are based off of. And it is basically based on market rates and treasuries. And so when those yields come down, that is good. When the Fed cuts and rates come down, that's good for car loans and credit card loans. Obviously, ARM rates, stuff like that. So when you talk about market rates, SOFR is a big deal. By the way, the history of us getting onto SOFR and off of LIBOR, the London Interbank Offering Rate, you remember that, the LIBOR? Anyone remember the LIBOR ARMs back in the day? There are all these central banks that were kind of like in cahoots to mess with rates and artificially move them one way or the other, which infected our entire financial system in America. And we're like, screw you guys, we're out. We're on the SOFR. So will there be any more of that nationalistic, screw you guys, we're doing this and that? I mean, I could go on, but I digress. Let's not get into that. Okay, what are some other feathers in the cap of the Fed? That just worked out. Thanks, Rich. Good call. Okay, so there has never been 100 basis points of cuts and then 100 basis points of yields rising. So I feel like there's some asymmetric opportunity there if the market comes one way or the other. That something's going to break. I don't know how much or how hard or what kind of dive it will be, but that's a very big divergence. It's never happened. And so something's got to give. Maybe it's inflation keeps rising. and maybe the Fed cut too much or too soon, but maybe inflation will continue to come in line, which I think it slowly is coming down. So let's take a look at the massive amount of cash on the Fed's balance sheet. So they have a ton of cash, which actually relieves some pressure going into this March continuing resolution and budget debate. And the reason why is because it's not like we're about to run out of money and then we can't pay all these people. There's still money, to run the government. So there's a good amount of cash on the Treasury and Fed balance sheet right now. The Fed could just say tomorrow we're going to stop running off MBS. We're going to stop running off Treasuries. We're going to buy Treasuries. That could be as much as a $500 billion a month swing in the Treasury market, which is significant. Why? Here's a look at our fiscal 2024 budget as it stands today, okay? Which started October 1st. So there's been like $1.2 trillion spent already since October 1st on the fiscal 2024 budget. And here's the entire budget I'm about to read to you. So $1.5 trillion for Social Security, okay? $1.1 trillion in interest payments. That's just interest, right? Medicare, $869 billion, and the defense spending is $826 billion. The discretionary spending is very little, so we're going to have to address all this stuff. The only one that seems kind of realistic to address is the interest payments. So if we find a way to get the Fed funds rates to come down and we take care of inflation, all these other things, then when we're selling treasuries in the market with lower yields, then those coupons, when they're getting paid, it's less interest payments being paid by us, yours truly, our tax dollars going forward. So unusual amount of cash on the Fed balance sheet. They could expand their balance sheet. And did you know that the U.S. supposedly has the largest store of gold in the world? I'm talking about gold here. So they only account it, though, on their books at $42 an ounce. Have you checked what the price per gold is lately? It's around $2,500, $2,600 an ounce. So on the balance sheet, $10.4 billion. But if they recognize it at $2,600 an ounce, there's $687 billion of gold that we know of. And who knows what else is out there. Okay, something very interesting that I read that I thought was interesting. I am not a financial advisor. I am not responsible for your losses, only your profits. This was interesting. So there's a lot of tax loss selling that goes on at the end of December. And so it's called tax loss harvesting. That selling pressure tends to go away, at least for that reason, okay? And so there's something called a wash rule. So if you sell something for tax loss reasons, like you want to recognize a loss so you can have it to offset your income and bring down your tax base, if you wait 30 days, then you can go back in and start buying again. If you buy something within 30 days, the wash rule allows you to not have any kind of tax implication. So let's say I sold NVIDIA and then I bought back in all within 30 days, whatever my gain or loss on capital gains doesn't exist because I was within that 30-day window. So you have the right to churn your money like a washing machine and wash that money, not laundering. FinCEN, I know you're out there. Okay, so will the buyer step in? Jensen Huang, CEO of NVIDIA, arguably the greatest company existing right now, was at the Computer Electronics Show in Vegas. He's a keynote speaker yet again. The stock price ran up to an all-time high today. And I gave someone a tip a couple weeks ago to buy it at 130. And there's a lot of analysts that think that NVIDIA is like the stock pick of the year. Again, I am not telling you what to do. It's now at all-time highs. Who knows? I don't know. Who knows? Anyway, it is at all-time high. It's a nice little run here lately. Okay, so with that new money flowing back in and more buyers with still just about $6.7 trillion of money market funds sitting on the sidelines, is it going to run back into the stock market? Typically when money gets sold for tax loss harvesting in December, it tends to come into maybe smaller cap underperformers from the prior year, not necessarily the same winners. Look, we can all do our research. I'm just regurgitating one of the articles I read. It was kind of fascinating to hear about this velocity of money. Okay, my AI component, okay, before we go. There is the Orange County Fire Authority, and there's this AI system in San Diego that looks for anomalies, and it spotted one on December 4th at 2 a.m., and it reported, 2 a.m. in the morning in a canyon in Orange County. Okay, there was no one there, no one called in, and then woke up the fire department. They went out there and they put out this fire, which could have been a rager burning hundreds of acres overnight before someone got to it. AI saving the forest. Telling you, it's all coming. Have a wonderful week, jobs week. Cheers.
Hey, it's KP coming to you live from Dallas-Fort Worth. We're at DFW Airport, just landed, and an hour and 40-minute delay for all my road warriors out there. Another great start to 2025, but it pales in comparison to trauma that everyone's facing in Los Angeles. I actually cut a video last night on my desk, and I guess it was corrupt and it didn't upload. So I'm going to do another one here. We're very close to Los Angeles. Our office is in Corona, which is Riverside County, and we are inland. And those winds have been coming from inland, from the Palm Springs, lower desert area, and that's Santa Ana, the devil winds. And when they overpower the winds that typically blow about 90% of the time from the Pacific Ocean, you can see the horrific damage that they can cause if there is a fire. Now, there's like 5 or 6 fires, and obviously, you got arsonists out there being caught with blow torches and starting fires, and so we'll get to the bottom of it. It's a total nightmare. PRMG Cares, our 501c3, we're going to put out a charity auction drive. So it's a donation drive. We're going to pick ourselves a couple charities that are local, and we know you could just click on the link and have it go there. But we want to sweeten the pot. We want to rile the industry. We want to use my platform and all of our AEs and loan officers and branch managers around the country and all their social media. We want to use that to make sure that we can rally everyone across the country. And we're going to sweeten the pot. You guys may know Caleb Malice, son of Gary Malice, one of the 4 owners, my partner. And Andrea Malice, great kid. Him and Cammie, his older sister, his younger sister who babysat for my kids. He's the one that draws all the art for our art auction when we create, that auction drive. He's going to create an oil painting, a unique piece just for this. So you're not just sending money to charity, you also could get something if you donate the most. Second prize will be a pair of Laker tickets. We'll work on the game and when that is, and that's row 9, and possibly even our better seats. We'll get into that, and then third place will be like a bottle of Dom or something, 2 bottles of Dom. So we want to sweeten the pot. Everyone's been asking how they can help. We're gonna get the word out. So my construction partner, as you guys know, I do those videos quite a bit from our properties. Jason and his wife Britt, they live in Malibu Canyon. Their house is right in the throes of this expanding Palisades fire. I have a Picasso co-owner friend that Picasso linked me up with. Love Picasso. They rallied all of their resources, all their properties, and they're sorry for the change of scenery there. You can see snow on the ground here, and DFW, we're in the airport. My buddy Matt and his ex-school Sachs buddy Andrew. Matt works at CoreLogic, great partner of ours, and they just had a huge successful sales rally, and let's get in the debrief. All right, we're on to the stadium. Okay, so my construction partner Jason and Britt, they live in Malibu Canyon, and the Palisades fire has jumped over Temescal Canyon Road and Topanga Canyon, and it's been making its way over to their house, and so they've had to evacuate. There is no water, but they do have trucks at the intersection where they live. If you're familiar with the area, they're behind Pepperdine, and they're at a major intersection where all the emergency vehicles at. It's basically Piuma and Malibu Canyon Road, and so they're going to try and bulldoze and create a fire line. I hope to God, they're great friends of mine. They got 3 little kids. They've had to evacuate since Tuesday. I was talking about Picasso earlier, how they were rallying. I got a text from Picasso, such a great group. Remember that? It's the Second Home Co-Ownership company, co-founder of Zillow, Spencer Raskoff, and a DocuSign type company called .loop, which many people in real estate are familiar with. Austin Allison. who sold it to Zillow. Those two are the co-founders of Picasso, and they rallied everybody hard on Wednesday. I got a text to use one of our units on Newport Beach to house someone who was displaced in Malibu, and I said, hey, we'll do one better. In the spirit of what every one of us wants to do and give back, like in this PRMG Cares drive, I just said, I got a condo in Rancho Mirage. Let this lady go live there for a month, just go get stable and instead of bouncing around from place to place. So everyone's doing what they can. There's a lot of links out there, and we're going to vet them out and make sure that we pick a couple charities that really help people in need, and possibly even the first responders. So it's part of the insurance crisis. The California Mortgage Banker Association, you guys know I'm on the board of directors for that. We've been talking about the insurance crisis for a year and a half. We'll be back again in Sacramento for legislative days, I believe March, and we'll be hammering them again, to let these insurance companies back in. It's a travesty. It's a serious crisis, and it just got worse. So the state needs to act. On that note, it's Jobs Week, a lot going on. I guess maybe it's fortuitous that my video didn't upload last night, so I get to throw in the jobs report that came out today. This week of jobs data was both good and bad, so it was a little bit for everybody. It was really overwhelmingly good today, which is the big top tier one report. There was 256,000 jobs created in December versus the 160,000 that was anticipated. But let me just say this: that's the second half of November and the first half of December. And we all know seasonally jobs start to trail off after Q4 and holiday season. So lots of jobs in healthcare. So government's still standing up, lots of job growth. And of course, there's job growth in leisure and hospitality. Now, small businesses this week didn't fare so well in some of the jobs reports. They are the ones that are hit the most by higher interest rates. So we talk about small caps. You can look at the Russell 2000, you can see what businesses are small cap businesses. When rates go up, those businesses that rely on financing to get, their businesses up and running, they're hurting right now, and they are slow to hire right now. 55% of all jobs in America are created by small businesses. So we're going to keep an eye on that. We had a slowing hiring rate and a slowing quit rate. And those are both signs of weakness in the labor force. So we went, this like the lowest number since 2014 and 2013. So companies are slower to hire and people are slower to quit because they know for jobless claims, which is our best leading indicator, which came out Wednesday due to President Carter's funeral ceremony on Thursday, the markets were closed. That number was lower, all right, just a little bit over 200,000 jobless claims weekly. But there are 1.86 million continuing claims. So it's hard to find a job once you're out. So there's a little bit for everyone, but overwhelmingly the job data was positive. I'll throw in one more nugget that I found from somewhere. By the way, the hiring rate, quit rate data I got from Dan and Barry Habib. The data for the unemployment rate, which ticked down today from 4.2 to 4.1%, it has not since 1980, counted part-time work and people who leave the workforce. It used to do that in the Carter era and before. So we have what's called the U6 unemployment rate, which counts everyone in the workforce, even people that haven't found a job in 2 years. That number's 7.4% through November. I don't have the December number yet. And there's a company out there that does what they call like the shadow government data. They said if they were using part-time and people who quit looking for a job in the unemployment rate like they used to do prior to 1980, our unemployment rate would be 20% or higher today. So again, our good news is bad news for the stock market and mortgage interest rates, and bad news is good news. So we're in that mode right now. I'll just kind of leave with this. We have inflation data coming out next week. CPI is on Wednesday, Consumer Price Index. The PPI, I believe, comes out on Thursday, which is the other part of the Fed's mandate. Stability of prices and low unemployment. Of course, the third part is longer, moderate Treasury yields, like, for example, 20-year and 30-year long bonds. There's a lot of Treasury issuance being dumped on the market this year. The Fed is keeping their balance sheet dry powder there, and I think they're waiting to see what goes on with the budget and see how unsustainable our Treasury issuance will be. $10 trillion is coming on the market this year alone. the Fed could easily stop running off treasuries and start buying as well and make a big dent in treasury yields and, of course, mortgage rates. We'll get back to you on Monday. Hook 'em.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.